Perfect. Good morning, good afternoon, good evening, Facebook and YouTube friends and family.
Good morning. I'm going to adjust my mic because I know how bad my sound is. So I'm trying to work on it. But for right now, let's see if I can fix it. All right. Hello.
Good morning. So today we want to talk about why everybody should own a business. And, you'd be surprised as to some of the reasons.
Right. So we have these things, right? And we think of one person in every household should know how to trade. And we think that everyone who is an adult should own a business. Why?
Right.
Why? It's like this is going to be this dirty word that people either don't want to talk about or they like to argue about or talk about politicians and their tax policies. It's taxes. It's taxes.
Yep. One of the common misconceptions is that there's a different tax code for rich people versus poor people. And that's actually not true. There's just a big difference between being a W-2 employee and a 1099 employee. A very, very big difference.
Huge difference, like business owner versus employee. So I think sometimes where we get the whole rich versus poor thing is because a lot of people become rich or wealthy, right? By owning businesses, by having business systems. Maybe they have a business that runs multiple real estate properties, big corporations. So we think about that. Oh, these are the rich people, but you can get the same type of tax breaks, and by the way, before we even start on this, we are not tax advisors, financial advisors. We're not going to be able to give you any very specific information on what you would do with your situation. But I will tell you overall, you can get the same type of tax breaks that the rich that you think of get by simply owning a small business or a home business.
Right. Like, think about it like this. For employees, you have your income that comes in, and then you pay the taxes, and then you spend your money. Right? But It's a little bit different for business owners. They have their income, they spend the money that comes in from that business, and then they pay taxes. It happens in a different order, and that affects your taxes, right?
Right. So let's say you make $100,000 a year as an employee, you get taxed. Let's just use it. Say you're a 25% tax rate. Okay. So now that means you're paying $25,000 in taxes. I'm oversimplifying, but let's just say that. So now that means that you're left with $75,000 to spend, right? Easy math, 100,000 minus 25. Now, a business owner now, let's say they have that same $100,000, they're going to go ahead and spend it within the business. And we can talk about some of the things. Again, we're not experts. We can talk about some of the things that can possibly be tax deductions. Mm-hmm. But when you own a business, a lot of the things that you already are buying and doing, if you just incorporate a little shift in mindset of how you're going about those things, purchases, how you view those purchases, how you see those purchases, things that you do, you planning vacations around business trips and things like that. So that like when you go on a business trip, let's say, or if you want to do something charitable and maybe you take a vacation with a purpose, right? Yep. Things like that. So when you take that same $100,000 and maybe now you're able to write off, let's just say $70,000 in stuff that you spent money on because it legally falls into tax deductions for the business. Yep. Now you only have $30,000 in an income that's being taxed, right? And let's say you're in that same 25%, at this point, you're actually probably lowering the percentage that your tax bracket you're in, but let's just say you're still in that same 25%, right? Now you've only paid $7,500 in taxes versus $25,000 in taxes. And what does that mean? This is how the rich people build their wealth. You ever wonder how they build their wealth, right? That's $17,500 extra that they can now use, that you can use to put into investment portfolios, extra money to savings or spend it, whatever. It's more money than you had before. The wealthy are not letting the IRS keep a bunch of their money. And if you don't mind, Christine, I'm just going to talk for just a minute about because I don't want to like dominate this, but I do want to talk about this really quickly. If you are a W-2 employee, right? So you punch the clock 9 to 5, they take taxes out of your check, right? They say when you can come in, when you can leave, right? When you can take your vacations, when you can go to the bathroom while you're at work, whatever. You're a W-2 employee. If you start a home business, it may give you the ability to get an instant take-home raise almost immediately from the job.
Mhm.
What? Yes. Because now that you started a home business, you're going to have things that, and of course you want to always be consulting a tax professional. So you do these things the right way. But what you're able to do is now deduct a bunch of stuff you weren't able to deduct it before. So you're not going to owe as much tax possibly at the end of the year. So instead of taking, let's say they take $300 a week out of your check for taxes, maybe now they only need to take, you can up the deductions that you claim on that W-4 form, that form you fill out when you first get a job. People don't think about it again. You can call your HR department or whoever runs that for you and have those. If you're claiming 3, you can now maybe claim 6 or 7 and have less taxes taken out immediately and start taking home. I've seen people take home more, $1,000 more a month.
Right.
Just by changing the deductions. And the other misconception about that form that a lot of people have, and we've seen it so often, is they think they need to claim on that. It's not the same as your taxes that you file. They think they need to claim, let's say it's my husband, myself, and my son that live in my house. So they think they need to claim 3 on that W-4 for them to pull taxes out. That is not the case. You can claim whatever number on there that you want that causes you to not owe money to the IRS. So if the only number that is not good is if you go over and you claim 20 and all of a sudden you owe money to the IRS. Okay. So chances are that you could be taking home more money every single week from your W-2 paycheck by starting a small business. And on top of it, if you think about like, what does it take to do a small business? We're not talking about anything extravagant.
No. Like some of the stuff that we went over was just starting a business with $1 and reinvesting that $1. Like for you guys who didn't see the TikTok, $1.06 gave me $25 in revenue, which was reinvested into the business to reproduce the product that I made for $1. And starting a business from there is extremely easy. We go over affiliate marketing. We go over quite a few different things with you guys, and they are low cost to begin, right? If you have more money, great, put it in, but you don't have to have this big budget to begin a business. Like we showed you how to start one with $1.
Yeah. And I've had this conversation with people before, Christina, like about this W-2 job income and being able to start a business and just talk, consulting with their tax person real quick and getting those deductions moved up. Yet the dependents that they put, it's not even dependents, but the number you put on your W-4 form, right? And they're like, but I like my big tax return at the end of the year. That's like a savings account for me. So my question always is, I'm playing devil's advocate when I say to you, like somebody, okay, you like your big tax return. Okay, cool. But now let's look at it this way. Do you think that's what the wealthy are doing? Oh, IRS, you hold all my extra money for me, interest free.
Right.
You give it back to me next year.
Right. Like what happens when you have other expenses that come up during regular life where you might have needed that little extra chunk, but because you're letting the IRS hold on to extra money for you monthly, you don't have that extra money that you might need. And
or invest.
That money that you have hanging on at the end of the year, cool. If you have your deductions set correctly, if you have your exemptions on your W-2 form set correctly, that money that you'll be getting, put it aside,
Right. And so that's the other argument. But I won't put it aside. Well, get your crap together, because that is my professional elegant thing to say, because what do you mean? Like, well, I won't do it. And I was on this wealth summit this week. Today's gonna be the day 3 of 3. So by the way, this thing was free, everybody. So there's all kinds of information out there that you can educate yourself on. Do they try to sell me stuff? Sure. Did I buy something? Yeah, I did. Okay, but the free information is so invaluable. And one of the gentlemen was talking about how he was doing another broadcast class that was free, and it was about lowering your taxes. And this person came on in the chat and was like, oh, is this going to be another thing about how to start a business to lower your taxes? I don't want to start a business. I want to learn how to lower my personal taxes. And he was like, I got news for you. The only way you lower your taxes is by getting a business. You cannot, there are little tiny things with home ownership and stuff like that. But if you are, if you are just a person who's getting W-2 income, you don't have a lot of options for lowering your taxes. So he was like, I hate to tell that guy, but yes, the reason why we're doing this about lowering taxes is about starting a business is because that's how you lower your taxes.
Right, exactly.
This is the tax code. It has nothing to do with rich or poor, nothing to do with rich or poor.
Right. Now, this next part is not tax advice. Okay. We are not financial advisors. We're not giving tax advice. Seek a tax professional. But we do want to let you know some of the things that you might be able to write off on your taxes when you have that business on the side. Okay. So we'll go through just a few, a little short list.
Give them a short list of just what's possible.
Right. So one of the things is business supplies, right? If you are working from home, if you're running your business from home and you have to purchase staplers and paper and ink, those are supplies for your business. You can write those off. Hang on to your receipts.
Right. Yeah. And think about all the software and electronics you buy. Okay. I'm going to throw one in there it's not on our list that Christina and I bulleted out for today. So ladies, stop buying purses. What? Yes, stop buying purses. You need to start buying bags that are for transporting your computers that are very pretty and kind of look like a purse.
Yep, laptop bags.
Well, yeah, but they could be a purse that you use for a laptop bag. It's all about what your intention is when you buy something. Are you going to store your cell phone in that bag to bring around with you, right? To do business.
Yep.
Yes. Right. So like I was listening to a guy today, he says, my wife owns no purses, but she owns lots of cell phone bags and lots of laptop bags.
See, like this? Okay. So just read between the lines there. Okay. Another thing that you could possibly write off would be like your home repairs and maintenance, especially if you have a dedicated office space. Please look at tax law. That is a very sticky one. But if you have a dedicated office space in your home for doing your business, repairs and maintenance can be covered possibly.
You know that we can hear you, but not see you, Christina.
Really?
Oh, wait. Are you on your phone?
No.
Let me look on the Facebook. Keep going. Keep talking.
Okay.
Let me look.
So the next one would be like rent. Some of that can be written off. If you are renting a property and you work from that property, you have dedicated space. But again, like the rent one and the space, the home repairs and things like that, seek a tax professional because that is a very sticky one, but we wanted to throw it in there for you. Okay.
I can see you on my phone, so it's something with my computer on my end. So we're good.
Okay.
Do you want me to cover a couple?
Yep.
Car costs, right? When you're driving around to do things, if you have, and it's not just business related, once you own a business, let's say you own a business and you have to do your own medical stuff now for your business, right? You're getting your own insurance, trips to the doctor's office. And people are like, well, I don't really want to log my miles. Okay. So here's a good analogy. And I learned every day how to convey these things to you. I learned this new way to convey this to you and how important it is. Every time you drive about 2 miles down the road for something that would have been tax deductible, take a single out of your pocket and throw it out the window.
Oh,
2 more miles down the road, take a single aisle wallet and throw it out the window. Another 2 miles, take a selling. Now you've gone 6 miles and you've thrown $3 out the window. That will probably be enough to figure out that I just need to spend $3 on a little paper log to write down my lot because I'm tired of throwing dollars out the window.
Exactly.
That's how much you're losing money when you're not logging your mileage for a business. And you're also losing money when you don't have a business to have things where you can log your mileage and write it off. And I think that's a good way to think about it because I also have been lazy with doing my mileage and just throwing, so thinking even the thought of it, throw the dollar out the window.
Mm-hmm.
Yeah, that's what you're doing. Don't do it, right? Start just logging your mileage. I mean, it's that simple, but we don't realize like how many things could be saving us money on our taxes just by doing like you're really that lazy. So you'll go punch the clock from 9 to 5 and let your boss tell you when you can pee, but you won't write down. It takes 5 seconds to write your mileage down on a piece of paper that's in your car.
Right.
Right. Yeah. So there's that.
Yep.
Go ahead.
One of my favorite ones that we had talked about maybe a week ago is dinners.
Mm-hmm.
So I've learned that when I go out to dinner, whether I am having a business conversation at that dinner or whether I am prospecting the waiter or wait staff that is at that restaurant, at least a portion of that can be written off. So if you go out to dinner with your family, maybe you want to spend an extra few minutes talking to the wait staff, the manager while you're there and write it on that receipt. Just think about it.
Yeah, and that's been a 50% tax deduction in 2021, 2022. It's 100% for these 2 years. COVID has done a lot of interesting things. So
yeah. Check out, I'll show you guys some stuff on our TikTok. I will post some of the highlights from a dinner that we went to out of state that was a 4-figure dinner that is a tax deduction. It was a very pleasurable experience. That trip itself was a business trip. So my room and board for the hotel, my flight, the car that I had to Uber to get to the airport, tax stuff, write it off. Okay.
Yeah. And there's just things that IRS looks at and I forget the 4 things off the top of my head. Why do I forget them? Because I'm not a tax expert, but it's certain things was it reasonable? Was it necessary? Right. So was it necessary to fly to Hawaii for business with your 4 kids, or could you have done the same event from home? They look at those types of things. So it's not like, you're not going to just go, I'm going to have a free for all. I'm going to tour the world. I'm going to write it all off. You need to have things that you're intending to do that are necessary for you to be in that location. Right. And so that's what I'm saying. We're not tax advisors, but you also want to make sure that, you're just thinking about that stuff, that it's possible to take a trip to Hawaii, which Christina did a few months ago, and write it off on your taxes.
Right. Like that trip, we were there for 5 days. The 3 days in the middle, we had business boot camps every day. The business boot camps were not broadcast online. They were only live on location. So we took a trip.
So it was necessary for her to be in attendance to get this information.
Exactly.
Yeah. If you have employees in the business, a lot of us don't, but if you do, then obviously what you pay your employees along with all the benefits you give them is going to be a write-off, right? Your retirement plans that you put money into, and there are certain different things we won't get into, but you would want to talk to your tax advisor about. If you've taken loans out or you're using your business credit cards for things, all the interests on those loans and those credit cards is also deductible on your taxes.
Right. Insurance is a tax deduction, and both types of insurance for you and healthcare, because that's the thing, as well as on your vehicles, on any property that you have. The cost of the goods that are sold, if you pay a distributor for packaging and things like that, that is a tax deduction, right? Qualified business income. What's that one, Christy?
So qualified business income, you're going to want to Google it, because I feel like if I give out too much, if I give out too information, I'll be kind of looked at as tax advice. And we may see some of the qualified business income things change with the new tax laws that they're proposing in Congress right now. But just know that QBI, as it's sometimes referred to, is tax deductible, and you can Google it. But I don't want to. We talked a lot on our Wealth Summit yesterday. We went into QBI in great detail. So I feel like, and they were experts and advisors that could talk about it. And they went into such detail that I was like, oh, I don't think I want to go into that much detail when we talk about it. But just know that it is tax deductible at this point in time. You know, we're this day of this recording.
So we're giving you some homework today. Google QBI. Okay. And find out what that is. I'm going to do the same thing because I was not on there. So I'm going to do my homework too. But cleaning services and supplies can be written off. If you have a cleaning service come in once a month, even gardening services and things like that to keep your property up, especially if you guys are part of like homeowners associations and things like that. Some of that stuff is part of that agreement. You work from home, it can be written off, right? Mortgage interest, professional services. If you are paying for print services, or like I said, the car service that I had to take to get from home to the airport for that trip, any service that you're paying that is business related, that service is necessary in order for you to be able to conduct business, those can be written off.
And if you're obviously, I mean, maybe some of these are obvious and maybe they're not. So I'm glad we're covering some of the lists. And again, not every single piece of something you buy or spend money on is going to be deductible. That's why you want to talk to your professional. But you know, if you're shipping products, like I just shipped out minors to people. If you know the postage, the shipping costs that you're spending on them, dry cleaning when you get back from a business event. So why not throw all your dry cleaning in?
Yep.
Right after the business event. So that because you're going to take that business outfit to get dry cleaned anyway. Memberships and subscriptions to things that have to do with your business. There are rules to how you can write off like your startup costs and things, but those are also tax deductible.
Yep.
You know, your cell phone. And one of the things that I learned yesterday about your cell phone, I've always thought that I had to figure out what percentage of my cell phone, I'm not talking about the landline at this point, what percentage I was using it for. And the way they were talking about it, again, not a tax professional, but the way they're talking about on the summit yesterday was the purchase of the cell phone, the purchase of the phone. So if you buy $800, $1,000 phone that, you know, from, you know, whatever you like, Android or iPhone, that's not one of these conversations today. And so what, and I like trying to recall exactly to say this correctly. Was it necessary to have a phone? Yes.
Pretty much.
So it's not like necessarily having to figure out which percentage of the phone bill you're using, especially nowadays, because it's one flat fee usually. Yeah. It's not like the old days where you had separate long distance charges and things. And so I thought that was interesting because is it necessary? It's almost necessary for everyone to have a phone now. Exactly. In business. How can you do business without a phone? Health insurance, Christina talked about. If you send your employees for education, if you do have employees, like my husband worked for a place and they sent him to get MSOE certified. I said MSOE because that's my old school, but that was he said that is not the right acronym, but he got Microsoft certified. They could write that off when they sent him for that education class. Right. So that's just a short list.
Right. We just gave you a short list of things that could possibly be tax deductions. Go seek out your tax professional to find out if these things are things that you qualify for. And I'm quite sure there's a much more extensive list of things for you to choose from in your geographic location that might benefit you or urge you to start that business.
Right. This list is like what we know of in the United States. So if you're listening from another country, we don't look at that for us because, you know, we don't live there. So you always want to be consulting a tax professional, no matter where you live. And even if, you know, this broadcast piqued your interest, I think one of the things that has piqued the interest mostly of people that I talk to individually is they didn't realize that starting a business could get them an instant pay raise on their next paycheck.
Yep.
Like what? Yes. Like you don't have to wait for the business to make money, right? And every situation is different. It may not be your situation. It depends on what you earn and what your W-4 looks like that you filled out with your exemptions. But most people end up going, oh, I didn't realize I could take an extra $200 a paycheck home. I get paid every week, or $300 every 2 weeks. And that makes up my car payment, my electric bill. Yep. Right. But just because you click the thing that says, I'm going to start an affiliate business, I'm going to become an independent business owner with this company. Right. Or I want to start a business for $1, and you went down to the Dollar Tree and bought your couple of little things and your glue gun.
Right.
Right. So yes, it costs a little more if you didn't already have a glue gun. Okay.
Right.
But I want to tell a story for a minute about one of our members that we worked with for years. She was one of the top income earners inside of our organization for a long time. She sold her business and retired now. Okay. Now let me just tell you a quick story. She was curious. And her husband is an engineer, and he still has a high 6-figure paying job, and she has a home business. Okay. She paid her accountant just a little tiny bit extra to do her taxes 2 ways. She wanted to know how much they would owed if the money she made that year from her home business would have been W-2 income. So she's like, could you figure it out both ways? Because if it was W-2 income, there was nothing basically she could have deducted, right? But if she made it as a business, so he did it both ways for her. Do you know the difference? And this is her situation, right? It was $6,000 difference in taxes owed. If she would have owed $6,000 more if she would have been she used to be a banker. If she would have been still working at the bank and made that same amount of money, they would owe another $6,000. She goes, that alone covers all my business expenses for like the entire year, like a break even. So for those of you who look at something that might cost a few $100s a month to get started, whether it's buying supplies or it's getting, starting on your education, you may save more in taxes, possibly with your situation, than it costs you to start the business.
Right.
Just think about it. It's just possible. Your situation's your situation. But that's why, like, the money excuses and stuff. I don't want to spend the money. Let's take a look at your situation. Now, if you're elderly and you're in Social Security and that's your only form of income, then this probably isn't going to apply with getting extra money every couple of weeks from your W-2, right? So anyway, just some things to think about. And our job here is just to get you thinking.
Exactly.
Right?
Yep. So, and I need some of you guys to do me a favor. Some of you who already have those under the table businesses who think because it's under the table and you're not claiming some of that income that you have coming in, for those of you who were thinking initially that was how you could kind of skate through the process, you could actually be doing yourself a disservice.
Absolutely.
Just by not taking the time out to investigate, right? Mm-hmm. Just take the couple extra steps that it takes to figure out if that under the table business that you're running, that's bringing you an extra $400 or $500 a month, right? Or more, some of you guys couldn't be doing more for you, right? Do us a favor and do your research.
Okay? Let me just think about this for a second. Just again, like Christina's saying, do the research, because we're talking about taxes today. But one of the things that I also learned this week is that your tax professional is definitely not the only professional that you really want to have if you're building wealth, because a lot of times the tax professionals they have one little lens on, and that's to save money on your taxes. Mm-hmm. Well, that might not be beneficial to you. It's like, well, why wouldn't paying less taxes be beneficial? If you're looking to build wealth, you may be looking to get loans to start a home business. You may be looking to get approved by the bank to buy a rental property that's going to create more passive residual income for you. Mm-hmm. You can't get a loan if you're showing no income. think about it. So it's not, even though we're talking about taxes today, it's not always about just saving money on your taxes. So Christine, I agree with you 100% that there are a lot of people who get money under the table, that they think that this is a cool thing, but sometimes it's actually hurting you.
Yep. It's all in what you know, right?
Yeah, for sure.
Do us a favor. If you guys enjoy the content, go ahead and share it on your social media. Let your friends and family know that you just got some hints and tips about why you should start that business that you've been thinking about, right? And don't forget to subscribe to the Pips for Brunch newsletter so that you can get some additional hints and tips that we don't provide on the podcast.
Yes.
Now that is going to wrap us up. Christy, do you have any closing thoughts today?
I have a lot of closing thoughts, but we don't really have time for it. No, I'm just kidding. I have been on overload all week because I'm attending this wealth summit. And, the thing is that just the same thing I'm attending this week was available to everyone, but you don't always know about these things. So do yourself a favor. You can do us a favor too, but you can do yourself a favor and just investigate where you can get information from. You don't always have to pay for it. And I find that a lot of things that are free where they have something to sell, that's okay too, because I get a lot of information and learn a lot of things, even if I don't buy the product, right? Mm-hmm. Because it gives me a starting point to investigate things, or, things that I learned stuff this week that I didn't know.
Right. Exactly. So now you know where you need to start your research at, right?
Google.
Exactly. But that is going to wrap us up, guys. I hope you guys are having an awesome and productive day, evening, night. And we'll see you on the next show.
See you tomorrow. Bye.